Alright guys, Jason Graystone here. As promised, thought I'd share with you some analysis on some of the things I'm looking to play out into tomorrow. I'm not able to run the live room live tomorrow, but there's not too much setting up on my radar anyway. The market's got completely blown apart today. It's a very busy day on the economic calendar. We took a winning trade on the pound yen this morning in the live room, and we also took a losing trade on the euro dollar. And after we had Carney speaking, we had Trump speaking, then we had some FOMC talks, and since that release and those releases today in the news, we've seen some pretty erratic movement in the market. So I stayed well away from all that while that was going on, let the dust settle, and you can see we're still getting some reactions in the market, in some of the markets still. So depending on how these markets close will determine the higher or lower probability of this analysis. So I'm going to go through a couple of things that I'm looking at. Most of the pairs have been torn apart. There's a couple of things I want to go through on the Aussie pairs. So I'm going to share with you my analysis on the Aussie CAD and the Aussie dollar. All right, so we're going to start on the Aussie CAD. And as you can see on the daily, we were putting in lower lows and we were bearish until we started to consolidate at this level. We put in a lower low, lower close. We tested this level again, and since then we've been consolidating down in this channel here. Okay, we was looking to get bearish, and you can see we've had some bullish movement following the news releases today, and really the close of this candle will depend on what market's likely to do next. But if we drop down to the 240-minute chart, what we're looking at is we were putting in lower low, lower closes, okay, outside returns, and the last outside return was here. Okay, so this candle wick here was the previous outside return, and as we put in our new lower low, lower close, we pulled back up into the kill zone, and I was looking to get short in this area here. I couldn't get an entry reason. I did do a video on this. Couldn't get my entry rules met. And now what we've done is we've put in a higher close above the previous outside return. Now it's this point here when you stop looking for that trend continuation and you say to yourself, this is a potential rotation. We've now violated structure. We've violated the outside return, and we can stop looking for trend continuation, right? And that discretion is gonna get you out of trouble if you're a trend continuation trader and you understand the basics on how to read a price chart. Let price tell you what the story is and what's happening. If you can identify that, that's gonna save you a lot of pain. Okay, but as soon as this happens, I stop looking for trend continuation trades. All I'm looking for now is to see what the market does next. Now, we all know that we want a trend confirmation. If we want trend rotation confirmation, we're looking for a little pullback and then a higher close. If we're looking where market's likely to go next, I would say we're likely to test this DSR level up here, up at 98.60s. That level was previous support, become resistance, right? We know these structure levels are like magnets. If I was to predict where market was likely to test next, I would say this level here at 98.60. Now, how is market likely to get there? Well, we know that market's likely to move straight up, or we'll get a little pullback. And some of you guys might be looking to jump on that already. Now, I wouldn't be looking to jump on that trade. I like to have confirmation of a trend rotation before I look for any trend continuation trades. But there is a couple of opportunities here for you guys. If you're looking for a pullback and looking to jump on this thing to ride this up, or maybe you're a CTS trader looking at this area here with previous structure, okay, and you're looking at some kind of CTS style trade setup at this level. You might be looking for RSI to go overbought, retest the structure. Maybe you're looking for a double top at this level as well. RSI divergence, something like that, bearish divergence on the RSI. Or what you're going to see as we, if you trade cipher patterns, what you're going to see is if we bring on our fib retracement tool, you see we hit the 382. Let's bring on our extension tool. Hit the 127. So what you're going to see is if we bring on, I'm going to show you this pattern drawing tool. If we bring on our drawing tool, we can measure out this pattern here. You see we've got a cipher up at 98.23, so we're almost at market cipher. This cipher pattern is almost completed. 98.23. If you front run your orders, you're looking at getting your orders just below that level. Stops, you can see that I've used a 113 inversion based stop. So there we have our cipher entry. This will be a swing trade. I'm going to get my orders on for this. So you can see we've got our cipher entry at 98.23. This pattern draws all of my targets and stops on already. You want to make sure that you want to check your stop loss. This is going to be 100 pips of stop loss here, so whether that meets your maximum stop loss rules or not. So this is just within my maximum stop loss limit, so I'll be allowed to take this. I'm going to get my orders on this pair in just a minute, and if we drop down to the 60, you can see we've just broken and closed above the previous structure level. You guys might be looking for a pullback, look to ride this thing up for a retest of the highs. Not something I'm looking at the moment. I'd like to see a confirmation of this trend continuation before I look for any directional trading opportunities, but thought I'd share with you the cipher. So there's our cipher pattern. Be mindful of any news out during the Asia session. I don't think there's anything high impact. I think you've got some New Zealand news and some Japan news, just low impact stuff, but that's what I'm looking at on the Aussie CAD. We're going to go over to the Aussie dollar now. So Aussie dollar then, you can see since testing this previous structure support level down here at 71.60s, you can see we tested once, twice, we tested again and again, and you can see down on the lower time frame, since we tested that level, we've started to push up. We had a triple test down here, and we've started to push up. Now again, there's going to be a CTS style trade setup at this level. If market pushes straight up to that area there, that's where you CTS traders will be looking at this DSR level and start to build out your CTS score, and you're going to see you've got CTS score. But what I'm looking at, if we drop down to the 60, since we put in these lows down here, we started to push up, and we was putting in higher closes, right? We held this low, we put higher close, and we've just put in a new higher close following the news release. Now RSI has gone overbought. I'm expecting to see a bit of relief here, a pullback down into structure where I can look for a long opportunity for a retest of these highs. Now, if I'm to do that, where can I get involved? Well, the first thing I do is bring on my kill zone and say, right, well, the previous outside return to this previous high is the initial kill zone. I'm going to be shooting for a retest of the high, so I know that if price action pulls down, I need to get my stop loss below this previous outside return. Now, in order to get my stop loss below the previous outside return, I'm looking at an ATR based stop. We've got about 26 pips below the previous low. So we're looking at a stop loss at around 73.20s. And if we bring on our fib retracement tool, just to use that 50%, we know that I know that I want a minimum of a 1-to-1 risk reward. Okay, so we bring on our fib tool. You guys know that I use that just as a quick tool to measure out my risk reward. And if I'm shooting for a retest of the highs, right, I know that my kill zone is now this. So now I'm waiting for price action to pull back down into this zone, and if we can push into this zone, then I know that this is the area that I want to start looking for my entry rules. Okay, now you guys might have aggressive entry rules. You might just enter as soon as price action pushes into this level. You might wait for a double bottom. You might wait for a doji candle. You might wait for a higher high, higher close candle. Whatever it is, would be the kill zone that I look for my entry rule. My entry technique would be a higher high, higher close candle. Now, if you're unfamiliar with a higher high, higher close candle, go and check the YouTube channel. I did a video called a basic or a very simple entry technique, and it's all based around the rules of identifying a higher high, higher close candle. So that's what I'm looking at, guys. Potential trend continuation trade here on the 60. Now, if you take in multiple targets, if we're predicting markets likely to go here, well, then you can quite easily shoot for target 2s, split your position, have target 2 up at a retest of the high, or the previous structure resistance level. Okay. The way I'd be managing this is, as soon as we hit my initial target, if we hit my initial target, I'll roll my stops to break even. Okay. Wherever that might be. And as we continue to push up, each time we put in a new structure high, I'll roll my stops to an ATR below the outside return. Hopefully that makes sense. That's what I'm looking at, guys. There's really not too much else on my radar at the moment. There might be in the morning, but the markets have been blown to bits, and I thought I'd share with you these couple of opportunities on the Aussie pairs. But I'll be back on Friday morning, 8 o'clock in the live room. I'll also be in a kills room on Thursday, normal time, 8 a.m. New York time. But if you're not in a kills room, I'll see you in the London live room on Friday. Have a great rest of your Thursday, and I'll see you then.